Right. Good. Appreciate your time and thank you for joining us. Let's talk really long term now, and to do that, Raamdeo Agrawal, Joint Managing Director and co-founder of Motilal Oswal Financial Services, joins us. Raamdeo has compiled a very nice report of the top wealth creators in Indian stock markets. What do these companies have common, and based on historical averages, how does one predict the next wealth creators? Raamdeo, I'm really excited to know more about this wealth creation study, and I was looking at your wonderful presentation. Look like all winners have one thing in common. They have pricing power, strong return on equity and entry barriers.
Yes. So, good morning, and as far as this forum, value investing forum, which we are trying to organize today, is around buy right, sit tight, and what to buy. In the sense that buying right is very important in investing, and buying for long term. Though we say 25 years, 20-25 years, that's a thought process. It doesn't mean that the stocks need not perform for a shorter period and mid-terms and things like that. But if you look at the longer term performances, few qualities which stand out very clearly is that of course they are franchises which has pricing power, which are more than half of them are consumer centric. Then you'll find them that their competitive structure is very limited, in the sense that they are duopoly or triopoly kind of thing, 2 or 3 players kind of thing. They are also at, I'm surprised to see the number of companies which are completely new, like say Gujarat Ambuja Cement or Hero Honda. That is number 2, number 3 performers in last 25 years. Of course, ITC is the best of the lot, and Nestle, Lever, and all those companies have done very well. But really, to see that quite a few of them are new companies and quite a few of them are old companies. So how do you find them, 1 or 2 of them, into your portfolio? That's the real, art of investing.
What has worked in the past, do you think will work in the future? Because as of now, it's really consumer names which have great return on equity, no debt, lot of entry barrier and lot of brand ownership. But these stocks are expensive.
Yeah. So, Nikunj, what is going to happen is that in next 25 years, I'm quite sure the rules of the game is not going to be different. Mathematics of investing is going to be same. Maybe some of the stocks are a little more expensive, so returns will be muted on the longer term period. But as you take the investment for longer horizon, the current excessive purchase price also gets muted, but it also depresses the returns. So if you want to make about 18-20%, I think the earnings growth itself will take care of it, and some amount of depletion in the what you call P multiple will adjust itself. So if you buy something at 25, 30p, 35p on a 10-year horizon, maybe your returns will get depressed by 2-3%. If the earnings grows at about 20-22%, so you will get about 17-18%. But if you want upwards of 25-30% return, clearly you have to buy either a completely emerging new blue chips, or you have to buy the old blue chip at a unpopular kind of a situation. So if it is passing through temporary aberration or some kind of problem which it can overcome, but because of that valuation is very depressed. So either you buy a very old blue chip at depressed price, or completely new blue chip which is going to see a massive growth in the earnings in the years ahead. So that's the 2 ways. These are 2 ways to make maybe upwards of 25% compounded in the years to come.
Raamdeo, I like the caption, and that's quite catchy. Buy right and sit tight. What's the sense that you're getting? Do you think the timing of the market with the political, domestic as well as economics uncertainty is right, where you can buy and lap up stocks right now and then, sit on them for the next 2 to 5 years and they would give you stupendous returns?
Yeah, see, this timing is a kind of a very crazy thing. We should avoid only if it is very, very overvalued. Market as a whole. And typically one of the signs for markets to be overvalued is, apart from the historical number of 15-16 P multiple which is there right now, is the market loaded with the buybacks from the corporates, or is it loaded with a lot of IPOs, and that to low quality IPOs. So right now IPO market is completely dead. We are seeing all kinds of guys buying back their shares. So clearly, and P multiples are about 15-16. So I would say this is a very healthy market. and there is a lot of skepticism in the market. If you go around, the local participation is very weak, I mean almost zero. So I don't think stocks in general are overly priced. Of course, there are 30-40 consensus stocks which are kind of, it looks to be expensive. So there one can be a little cautious. But otherwise, broad market is not at all overvalued. So in that situation, the time is right. I think the real important thing is 85-90% of the problem for the retail and investing class in the stock market is buying the low quality companies. So buying right means buying high quality companies at appropriate price. That's the basic theme. So if you cut out the 80-85% which are substandard stocks, I think 90% of the job is done in investment management.
Raamdeo, buy and hold for 25 years. Raamdeo, after 25 years, I'll be 60 years. I don't have that much patience. Give me something.
Only?
No, you don't have to have, yeah. That's why I told you right in the beginning. When you talk about stocks for long term, even for short term, you have to buy the stocks which are good for the long term.
So, Raamdeo, if Hero Honda, ITC, Gujarat Ambuja and Asian Paints have made money in last 25 years, which could be the next group of stocks, which could be the big money, money spickers, the multi-baggers, like you famously always say that I like to buy multi-baggers.
Yeah, you like to buy multi-baggers, but they don't come like that in interview I mean, we can't say so many companies, and you have to keep trying. See, the point is that you buy something, say I told you last time about, say, Tech Mahindra, okay. So in a year or 2 years, you get one stocks which are very good business, very good management and very reasonably priced. So all these three parameters must come together for you to find a potential multi-bagger. I mean, whether it turns out to be multi-bagger or not, only time tells. And we know that for one multi-bagger, you commit 2, 3, 4 mistakes. So I think you will not get many names. So you have to load your portfolio predominantly with the existing winners. And they will not compound at 25-30%, but maybe they will do a good job of doing you 18-20%, 22% across the period. But future is very exciting. I know next 25 years is going to be far more exciting in terms of economic growth, corporate profitability and wealth creation than last 25 years. One has to get onto the job, and one need not be trying to see too much into the future in that precisely. If you see the slides which I have sent you, I mean, the companies were available at the prices 25 years back. I mean, we have lived all the 25 years. Like ITC was available for 110-15 crores. Gujarat Ambuja was available for 24 crores. Hero Honda was available for 24 crores total in 1988. Even your Infosys was available for 214 crores in 1994. Issue had flopped. Today it is 2 lakh plus crore kind of market cap. One of the strongest bets right now. And they have given 16,000 crores by way of dividend. On 218 crores Infosys, I mean, Infosys happened right in front of us. 218 crores in 94, 16,000 crores dividend, and 2 lakh plus crores kind of market cap today. So I think, I mean, one has to find one of these stocks into the portfolio, and which one that will be from here onwards. It's a matter of lot of hard work.
On your radar, do you think the kind of crazy P multiples of the market cap what a Hero Honda, ITC or HUL commanded 25 years ago, it will be difficult for an existing investor to buy such companies, such franchises?
Yes, I think as a group of companies, I don't have any doubts that these companies will do very well, but some of them will definitely fall on the wayside because of disruptive competition or disruptive innovation. So you have to be watching your portfolio and clean them up before it becomes too late. So some of them will scale up beyond your imagination also, because what is happening is now the opportunity for last 25 was very, very local opportunity. Like Indian economy was very inward looking. It was coming up from say $150 billion in 88 to more like 2 trillion in this period. So 25 years journey is from 100 billion to 100 billion to 2 trillion kind of GDP. 20 times in 25 years for Indian economy. But next 25 years is going to be from 2 trillion to more like 5, 8, 10 trillion dollars of economy. You must have seen Raghuraj Raman's kind of interview yesterday, when he said I mean, India will be top 3 or 4 economies in the world in the next 20-25 years. So clearly that thought process is shared everywhere, and one has to look at things in a very different way.
Raamdeo, so are there any mid-caps which could emerge as the dark horses in the near term or in the long term, you know, something that one could buy right now and then sit tight on it?
Yeah, so Aisha, I'll tell you, I mean, it's not about the names. I mean, I'm sure you're looking for a few names out there, but what I'm saying is the process through which one can find out. One is that the companies, I mean, one has to look at the businesses which has a large profit pool. I mean, if you look at the aviation, or you look at the sugar industry, or you look at some glass industry, I mean, they are perennially making losses. I mean, from those kind of industries, you will not find big winners coming out. But if you look at things like, say, organized retail, you know, organized retail is world over, they make a lot of money. In India, it's a zero profit right now. And it's one of the largest consumer market which is exploding at a very rapid pace. So in next 10-15 years, we are going to see emergence of 1 or 2 very, I mean, multi-baggers from the organized retail whenever they get their business model right. So, I mean, one has to keep looking for businesses where large emergence is going to happen. Then the consumer, I think 50% of the multi-baggers going forward will also be from consumer-centric kind of a situation. Third, it will be much more marketing success kind of a story. So, like what has happened is, so far India has been much more shortage-driven kind of economy. Going forward, it will be much more dominated by abundance and global supply. So, what will be important is not the production, but the marketing side of it. So, you have to look at those kind of businesses, and I mean, instead of bothering about 25 years, if you bother about next 5-10 years, and then scaling it up to a longer period as the time passes, I think that's the way to go about.
Raamdeo, if I look at your own presentation, right at the top of the list is Ambuja Cement. Now, Ambuja Cement is a commodity company. Cement is a cyclical business. So here you have a commodity company which has created massive wealth in last 10 years, even though it does not enjoy a complete, brand pull or a pricing power per se.
Yeah, so there are 2 aspects of Gujarat Ambuja. I have seen Gujarat Ambuja emerging right from day public issue happened, and it was very difficult for the public issue to go through. And then they did the right issue, and so it was the smallest cement company, and they ended up becoming the biggest and bought the ACC also. So this company is, I can see 2 advantages. One is a wonderful management team, which was very innovative, very energetic, and in an industry which is not very innovative. I mean, the cement of 87 and cement of 2014 is more or less same. So the business per se, underlying business per se didn't change much. The digital economy has not destroyed the value of cement. So that particular aspect of it, non-changing environment of cement. Second is that terrific management team, very innovative management team. They got early breakthrough in the cost management, and they could expand. They had a expansion mindset, growth mindset, and terrific value system in an industry which was very static in terms of innovation. So I think, but I was also surprised to see that Gujarat Ambuja and Madras Cement, both of them had done very well in the last 25 years.
Right.
Raamdeo, you've been a keen observer of the auto space. Hero MotoCorp, of course, is an old favorite with you. What about the recent developments in Maruti, and how do you think the minority shareholder is going to be impacted with the corporate developments?
Yeah. I was trying to go through all the developments, press release, their con call. I am still not able to figure out what they want to do, because in any case the parent company has almost 75% of all the profit pool. If you look at the royalty, post-tax royalty, and they have 57% ownership in the Maruti Suzuki. So they are in any case 75% beneficiary of anything they do in India at a parent level. Only 25% goes to the minority. So by doing this, I don't know what they want to do. It has created a lot of confusion in the minds of minority shareholders. And typically what happens is one manager does with one objective, and later on the same thing is being construed as a very different thing, and it creates a lot of problems. So I couldn't see their logic they are saying, at least in public.
So do you think the interest of Suzuki and minority shareholders are not aligned? Because right now it is about a plant in Gujarat. 2 years ago it was about increase in their entire royalties fee. Do you think Maruti now is really going to go down on the standard of corporate governance?
No, definitely in terms of corporate governance, it's a lot of questionable thing. What I see is that they are worried about Suzuki's cash hoards. They are not worried about Maruti's cash hoards. In Maruti Suzuki, you have 7,000 crores today. In next 12 months, it will become 10,000 crores. And on a 10% inflationary economy, you are getting about 5-6% on cash. So you are destroying value day in, day out in a company where you have a reinvestment opportunity. But you are bothered about somebody who's sitting in Japan and they're this thing. Just because there is a ownership this thing, I don't see things very straight. There is much more than what they are saying right now. That's my sense.
You just, reiterated the fact that you like the mid-cap themes and you think the next, dark horse is going to emerge out of the consumer theme, well-marketed and branded companies. Names like Nestle again have been an old favorite with you. Would names like Titan, Jubilant Foodworks as well come back into the play according to you?
They will be, even McDonald or Jubilant, as you said, Titan, or this organized retail space, then lot of new categories will open up. Absolutely new categories which are not existing today. Maybe it is existing in other parts of the world. Say a fashion bag company. It may not be right now a very large. I can see the ladies spending a lot of money on the fashion bags, but there is not worthwhile brand from India. So there is no reason why a very credible brand cannot come up from India. So you can see, say like Jockey, which was not there 10 years back. Today it is very formidable brand and a wealth creator, almost $1 billion company, growing at 30-35%. So those kind of very niche category brands can come up and suddenly, say I was seeing the interview of Benz, Bharat Benz today, and he's saying that they'll be very formidable 30% market share in next 5-10 years, and they fear competition not from the established to Telco and Ashok Leyland, but they fear competition from Eicher Volvo. So even the competitive landscape in auto space could change and give birth to new players like Eicher Volvo or Bharat Benz at the cost of established telcos and Ashok Leylands of the world.
Raamdeo, 30 seconds and I want to hear it from the horse's mouth. Which is one consumer name you're happy to own from next 5 years? I won't hold it against you. I won't ask you for next 5 years. But which is one stock you're happy to own?
I would be very happy to own. Since you are saying this, I own actually some amount. Marico looks to be a good idea right now.
It's multi-bagger idea then.
See, we don't know, Nikunj, you buy something which is good and then eventually it turns out to be, because you have to turn lucky also in terms of buy something and corporate developments happen, or the category grows very rapidly, or they go global, something is liked globally. So you don't know, if they are starting into hair color and suddenly their brand Livon is very successful, so the payoff could be very large. So you don't know what will work. You buy a terrific set of business right now, run by a terrific guy and at a reasonable price.
Raamdeo, appreciate your time. Thank you for really talking extensively about your wealth creation study. And of course, later in the day, which is at 6:30, you can watch the Motilal Oswal Value Investing Forum. It would be moderated by Ramesh Damani. Raamdeo will be part of the discussion along with Raamdeo, Sanjoy Bhattacharya and Nikhil Vora.